Hello, today is Monday, August 3rd, 2026. Here is your daily signal. Global oil markets are still feeling the repercussions of U.S.-Iran tensions, which, according to Fortune, have fueled record profits for giant oil companies as supply disruptions drive up prices at the pump. These disruptions began when U.S. and Israeli airstrikes against Iran in late February triggered a partial closure of the Strait of Hormuz, the world's most critical oil transit chokepoint, through which about 20% of global oil and LNG exports flow. During the first quarter of 2026, oil shipments through the strait dropped by nearly 6 million barrels per day, almost 30% less than the previous year. The International Energy Agency reported on July 10 that global oil supply remains 9.4 million barrels per day below pre-war levels, despite a recent ceasefire allowing Gulf oil production to recover by 4.1 million barrels daily in June. Brent crude prices hovered at $76.37 per barrel, reflecting continuing uncertainty and tight inventories. Near term, consumers are paying sharply higher fuel prices, with supply expected to stay restricted if disruptions persist. The risk of recurring conflict threatens to further delay economic stabilization and force governments to release strategic reserves. Medium-term, repeated volatility may accelerate investments in alternative fuels, LNG infrastructure, and transport routes bypassing Middle Eastern chokepoints, potentially reshaping the energy landscape if U.S.-Iran tensions remain unresolved. Next, turning to inflation developments in India. Indian companies are preparing for another round of consumer price hikes, with Bloomberg reporting that inflation has tested and exceeded the Reserve Bank of India's target for the first time in over a year. India's consumer price index has been volatile due to food and fuel costs. The RBI aims for 4% inflation, but recent trends have pushed rates above the 6% ceiling, driven by rising global commodity prices and supply chain disruptions since 2022. India's retail inflation jumped to 7.2% in July, lifted by an 18% surge in vegetable prices, according to Financial Express. Hindustan Unilever, one of India's largest FMCG brands, reported margin declines in the latest quarter as input costs soared. The Reserve Bank of India is expected to keep key rates unchanged at its August meeting, citing persistent inflation pressures. Near-term, sticky inflation could prevent rate cuts, keeping borrowing costs elevated and dampening consumer spending, especially for urban households. This may weaken GDP growth and cause increased volatility in India's equity markets as global funds react to unpredictable central bank moves. If high inflation persists, deeper structural reforms or supply-side measures may be necessary to stabilize prices and maintain investor confidence. Now, onto the global economic implications of open-source AI ubiquity. The rapid rise of open-source AI models, as discussed on Next Big Future, is starting to reshape industry economics. What becomes free and abundant often loses value as a standalone business. Open-source tools like Meta's Llama 2 and Mistral AI's Mixtral are increasingly accessible due to permissive licenses and post-2021 model releases, further democratizing artificial intelligence. This momentum has grown with Google's Gemini Nano and OpenAI's API moves, lowering entry barriers and spurring collaboration. Meta's AI lead, Yann LeCun, highlighted the potential for broad economic democratization enabled by open models in a TechCrunch interview on August 3. Hugging Face has announced a new commercial licensing partnership for large language models to support scaling and enterprise adoption, Reuters reports. Near term, this open ecosystem is fueling startup expansion, especially in finance and healthcare, while increasing overall competition. Medium term, OpenAI models may complicate state regulation and intellectual property enforcement, raising geopolitical tensions and sparking licensing disputes as governments and major tech firms jockey for influence. Broad deployment may also accelerate job automation, impacting content creation and analytics fields by 2027. Ultimately, democratized access could help narrow global research gaps, placing emerging economies on a more equal footing with developed countries as AI reshapes investment, innovation, and labor patterns. Now, onto the markets. Among sectors, the S&P 500 advanced with a day-over-day rise of 1.42%, led strongly by Microsoft surging nearly 5% to $487.65. Semiconductors edged higher by 0.55%, though SOX remains down over 12% month-over-month. Nvidia was a notable gainer. Finance ticked up 0.77%, boosted by XLF and moderate gains across banks, with no pronounced outliers. Healthcare slipped slightly by 0.19%, with Roman 45 holding relatively steady while stronger biotech moves offset minor declines. In real estate, XLRE rose 0.24%, supported by positive momentum among rate, while RWR was nearly flat. Clean energy rebounded, climbing 2.4% on the day, though still underwater for the month, with QCLN leading gains. International markets were mixed. Germany, France, and Italy posted modest increases, with EWG up 1.24% and Italy's EWI adding 1.28%, while Belgium's EWK fell 1.15%, marking the weakest performer. Commodities saw gold and silver both virtually unchanged, while U.S. oil USO dropped over 5%, offset by strong gains in uranium up 4.45%. Top gainers included Ritter Logtech Holdings Ritter, jumping nearly 283%, and Hydrofarm Holdings Group HIFM, surging 263%. Among losers, Agriculture and Natural Solutions Acquisition Ansqua plummeted 98%, and Inno Holdings Inc. dropped 56%. That's it for today. You can find more news and details on our website. Goodbye.